What's up, traders? Anthony Crudele here, and welcome to this week's episode of Develop Your Edge. Special in-studio guest for you guys this week, my friend Tom Canfield, otherwise known as @Caney4 on Twitter, is here to share with us his edge in trading. But before we get into that, let me take you to this week's Ninja Trader Charting Edge. All right, traders, been talking a lot about crude oil lately. Got crude oil up here on the daily chart. You know I love my Bollinger Bands. 20 period, 3 standard deviation Bollinger Bands. Red moving average is the 10-day simple moving average. You know I like that as well. And the gold moving average is the middle Bollinger Band, the 20 period moving average. Now, this is one of my favorite setups. And I want to go back a little bit with crude oil. We talked about how when the market's going up and the Bollinger Bands are open, I really love that scenario. When the Bollinger Bands start to close back up and that mouth starts to come back in, we then know we're kind of boxed in a consolidation range. We've been that way for a period of time up near the highs. And a couple weeks ago, if you remember, I talked about getting back above this 10 and 20-day moving average, and the mouth of the Bollinger Band started to go up. What I really like to see is when that top Bollinger Band takes out those previous peaks, which means we're expanding the range, we're expanding volatility. And this is an environment I really like for long setups. Sitting in longs right now in crude oil, trading around a core position on a swing basis. Also intraday looking at longs only. I think this is extremely important for day or swing traders. Identify the environment, and I'm just only looking at longs right now in crude oil. The only way that changes my mind are a couple of things. One, I start to see daily closes back below the 10-day moving average. I would start to rethink being aggressive long, because this to me is an aggressive look right now. Or the Bollinger Bands continue to go higher, market stalls, and then the Bollinger Band mouths start to come back in, similar to what we saw here. That would take me off of being this in this aggressive, I think, bullish phase right now for crude oil. That's this week's Ninja Trader Charting Edge. Now back in 15 seconds in studio with my friend Tom Canfield.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Kenny, thanks for coming on the show, my friend.
Thanks for having me, Tony.
Great to have you here. You know, a question that you and I get a lot is, what is our edge, right? People ask us this all the time.
Yeah.
And one of the big reasons why I started Develop Your Edge is because I believe that you don't just create an edge, and once you create an edge or find an edge, then it just lasts your whole career. You and I both wish that was the case.
Wouldn't that be nice?
Wouldn't that be nice? But we know it evolves. It takes time. That's why I call it Develop Your Edge. Each and every week, I'm working on it, refining it. So we've got you here today. Caney, what is your edge?
Good question. When you told me a couple of days ago that you wanted me to do this, I mean, my first reaction to you was, that's an awful long discussion, Tony. I don't know if we can get it in 5 minutes, but here's the way I look at edge, because I think sometimes it can get overblown and overfocused on, and people assume that edge is specifically your strategy, your method, your process, whatever you want to call it, the actual specific way that you trade, your entries, your exits, etc. And I've seen on Twitter a few times, different guys who've said, if you can't explain your edge in 2 sentences, then you don't have one. And I just think that's such a load of crap. And it does a disservice to what developing your edge actually means. So for brevity, there's 3 ways where you can try and gain edge, in my opinion. You've got your method, your strategy, your process. Mine is I buy breakout stocks. I buy leading stocks in leading industries when the market's in a good mood, when the volume is right. I buy those breakouts. And then I trade those breakout stocks on pullbacks to support and whatnot. So that's my process. It's very common. There's nothing unique about it at all. It's bred in that whole Can Slim, William O'Neill methodology. Thousands of traders trade like this. Some make money, some don't make money. So why is that? Because it's a clearly proven strategy. That I know. So there's 2 other areas where edge, I think, comes into play. First is something I'll call application, which is how you actually apply this methodology that you have. And then the last part is the mental, emotional, the psychology stuff, which quite frankly, I think is far and away the most important. But so for my style, there are environments when it's really good and it pays you well. And then there are environments, like now, for example, where it's not quite as beneficial to get too aggressive. And so over time, you start to learn what those environments are. What are the cues? What are the signposts that suggest that you're into a healthy environment versus maybe a choppier environment or environment that's not going to favor your process or your edge? That in and of itself, that ability to determine the environment, to know how aggressive you want to be, whether you're pedal to the metal or you're being really careful, that in and of itself is an edge. And that takes time. So everybody focuses on figuring out their process first, and you have to do that. But that's just like the small layer. From there, you start figuring out, okay, when does it work and when doesn't it work?
Exactly.
And I gotta be careful when it doesn't work. And for me, it's like, when I keep getting my hand slapped all the time, it's like, okay, maybe I need to back off here. It's like the system in and of itself tells you how aggressive you should be. So the last thing that I want to talk about, and probably the most important thing, the thing that I'm most passionate about, and the thing I talk about on Twitter and whatever, is the psychology of it all. And it all comes down to your confidence. Your ability to reclaim your confidence when you've gotten the crap kicked out of you. Your ability to maintain confidence. Your ability to overcome your fear in a situation and take a trade you know you're supposed to take. And take it aggressively because everything is saying this is one you really want to get after. And you've already been beaten up a bunch of times. And so having that ability to overcome that, having that ability to be tough enough to power through your fear in those moments is also a huge form of edge. And for me, that's really where I feel like my greatest edge over time has developed. I've taken some bad baths. I'll be the first to admit, as a discretionary trader, I get sloppy sometimes. I get annoyed. I get frustrated. I FOMO trades. I revenge trade. I boredom trade. I do it all. And none of it pays me. Because my system is telling me there's not much going on, and well, I'm wired as a trader. So I want to make things happen no matter what. And so it's this game that you're playing with yourself. But I found the reserves and found the ability that when the time shows up, when the moment shows up to get after it, I know how to draw that out of myself. Sometimes I got to flip on music. Sometimes it's just, it's an inner talking I have to have with myself about knowing what's right. Sometimes you just see it and do it, and it's easy and it's not a problem. Listen, there are some guys that are phenomenal traders that have the ability to wipe out their emotions and just execute and execute and execute. They're like 2%, maybe 1%. Then the rest of us are like me. They're emotional, manic, highs, lows. My wife sometimes thinks I'm absolutely crazy. But you have to find within all of those emotions a way to find your confidence, find your belief, and capitalize in those moments when the environment says it's time to go. And that power is what I would determine is my best edge.
I've talked about this so many times. You and I, we completely agree on everything you just said. I feel the exact same way. And I've said so many times that we as traders make money in moments. And what I felt for me in my career was being able to seize the moments. At first, I wanted to just make money every day, every month, right? Every year, you think that's the path. And then you realize over time that it just doesn't work that way. You have to identify the environment. And when the environment is good, you take. And when the environment is bad, you just give a little back. Right. And what I loved about the way you said was that you respect the feedback of the market. You recognize the environment, and when the environment is good, you embrace it. And when it's not good, you take that feedback and you say, back off. It's telling me what to do.
Right. There's certain setups and certain trades that you take that say this should go. And when it doesn't, and it bites you, you're like, okay, that's a big clue. And that's where you've got to let the market talk to you and tell you. It's not go back in and go hard again. The market's saying this we're not in that frame of mind right now, and so you need to make sure that you back yourself off too.
Does that feed into your line, which I think is one of the best lines of all time on FinTwit? Be dumb, follow price.
It does. It does, because it's a superpower to be dumb. It's a superpower. I know it's funny, but it's like you gotta let price tell you what it wants to do. If you start overthinking it and analyzing and strategizing, like I literally, and I've talked to you about this, I put my head in the sand. I don't want to know what's going on out in the big world. I don't want to know what Paul Tudor Jones said. I don't want to know what the Fed's got to say.
Yeah.
I don't want to know. I just want to follow price, because price, for me, for my entire career, has been the very best indicator of what's coming next. And so as long as that thing is doing what it's supposed to do, if I start thinking, I'll shortchange that trade. If I start thinking, I'll do things that I don't want to do. I'll try and be smart. Oh, well, they're shifting. I can feel it. I can feel the winds of change. Well, inflation's an issue now. So that means commodity, all this stuff you start creeping into your head. And all of a sudden you're like, oh my God, I have absolutely buried myself because I'm not just following what the damn chart says. So be dumb. Follow price. Make your job way easier. That's why I say it.
Kenny, we're going to end it here. Happy Father's Day, my friend, and thank you so much for coming on Futures Radio.
That was a lot of fun.
Hang tight. We'll be right back with my final thoughts. Final thoughts for today, traders. Man, I enjoyed that conversation with Kenny. I think he's one of the best people out there explaining a trader's journey and what we all go through. So it was great to hear from him today on what is his edge in trading. So I wanted to pull up this tweet to really tie in to the conversation with Kenny. And the other day I wrote, the more times you're in a situation, the better you become with handling it. And in my experience, this is the only way we can control our emotions in trading. But that's really not control. It's experience in dealing with the situations. Tying this in with my conversation with Kenny today, he talked about a lot of things: environment, time. We call this develop your edge because we evolve as traders. We don't just wake up one day, create an edge, and it works through an eternity. It doesn't work that way. We are constantly working on it. So I really wanted to tie this in with that conversation and tell all of you that you need time in this business. You need to get experience. So what we talked about today with Kenny was, when we recognize moments in the environment, a big part of our edge is capitalizing on them in that moment. And when there's moments in the market and the environment's not supporting our style of trading or our edge, we lay off and we give a little back, because we're always going to give some back, but we don't give back too much. I think that's extremely important in the development of your edge. Now, traders, I talked a lot about crude oil at the beginning of today's show, and I'm really excited that CME Group in July will be launching micro crude oil futures. To learn more about micro crude oil futures, go to activetrader.cmegroup.com. Remember, everybody, if you're enjoying the show, click that subscribe button. And if you have any questions or comments, please put them down below. You could also DM me on Twitter. My DMs are open, @Anthony Crudele. And don't forget to check out Instagram, Anthony C. Crudele. That's a wrap for today. See you next week.